All eyes are on Nvidia after a $278 billion wipeout this morning. What information is required here? After reaching billions of dollars in Blackwell revenues in Q4, we will continue to grow. These sell-offs, in my opinion, are buying opportunities rather than a reason to fear. Nvidia is a completely independent company. In the stock and options market, it functions similarly to a standalone casino, and this report is no exception. In response to tonight's earnings, Nvidia is predicted to move up or down 11%. Since we now know that the CEO, Jensen Huang, is not perfect, it has become kind of show me issue. We now believe that he is fallible, even though we didn't before. Perhaps other people believe that we shouldn't give it such a large multiple. That shouldn't be a huge concern in my opinion. Why not give it a 30 multiple on a $5 earnings number? However, I believe that the news of the yield issues caught us all off guard. Although we shouldn't have, we mistakenly believed it to be turnkey. Today's businesses are incredibly profitable, in contrast to the 1990s, when many were trading on eyeballs and had no revenue. Both Nvidia's sales and earnings per share (EPS) have increased by 100%. It is simply difficult to keep up with what they are doing at the moment, as they are surpassing Wall Street by exponentially greater numbers. It's also crucial to remember that over the past 10 years, Nvidia has had nearly 30% drawdowns. In fact, throughout those drawdowns, its forward PE, price-to-earnings ratio, was greater than it is today. Since Nvidia's future PE is currently in the mid-20s, this appears to be a typical time for profit-taking. In 2 years, that will seem like a godsend, even if it pushes Nvidia back to the $90s. Are you a buyer on the dip after considering all of this? If someone reads your research and follows you somewhere, are you encouraging others to do the same? We're getting close to it. We anticipated a 7 to 10% drawdown risk between now and November, but we've already seen an almost 5% decline. I believe that we may be getting close to finishing the correction by the end of September next week. I wouldn't sell anything here then. I don't need to add anything because I have a good job at Nvidia, but I enjoy the price movement leading up to the month's earnings. Although there is a lot of worry and some technological harm, I have faith that Jensen will deliver because their chips have been purchased by Microsoft, Elon Musk, and Meta, previously Facebook. This is a fantastic time to buy at these levels because I believe we'll see a big number at the end of the month. Seasonally, I believe the market will have a good Q4. I see a lot of support for Nvidia, and my level has been between $106 and $105. In fact, Nvidia is underweight, which is uncommon for me. We started the day with a 4.5% stake in Nvidia, which is equivalent to 5.5% or 6% of the S&P 500. In order to restore it to about a 5.5% weight, I added to Nvidia. We're merely going through the motions, but I thought the report was excellent. I think we'll be back above $130 before the end of the year. The report had to be excellent, but the question is whether it was adequate in light of the elevated multiple and price activity of the company. How would you respond to that? Dan Ives and I had this discussion immediately following the earnings release. He brought to my attention something that we all know but occasionally overlook when concentrating on a single quarter's profits. If you believe that Nvidia will do $0.79 next quarter, it isn't because you're positive on the company. If you're optimistic, it's because you can see $120 billion in revenue increasing to $200 billion, with profits power of $5 per share. For that future reality, the stock is inexpensive at $16 per share. You're in the stock because you believe in that future, but if you don't, that's okay too. As usual, all eyes are on guidance. An estimated $32 billion in sales is anticipated. How much higher would it have to be for the stock to have what Josh would describe as a significant plus reaction? Given that the other businesses account for a few $billion, I believe the buy-side rumors are closer to $33 or $34 billion, which would imply a data center guide of $30 billion or more. This quarter, they projected $28 billion, and Wall Street is slightly hedged. Her at $28.07 or $28.8 billion. The market may be anticipating closer to $33 or $34 billion, while the consensus for the next quarter is about $31.8 billion, or nearly $32 billion. How likely do you think they'll hit that? It's unlikely that the Blackwell delays that everyone has been asking about would have a significant impact on Q3. In any event, Blackwell's revenue in Q3 was not going to be very high. They won't provide guidance for Q4 and thereafter, but perhaps they will provide some insight. Naturally, August was a month of volatility for the Dow, S&P, and Nasdaq, with advances as the S&P approached new highs. In light of the impending jobs data and potential Fed rate reduction, what will September hold for stocks? Fundstrat Global Advisors Head of Research, Tom Lee, spoke with CNBC on the market response. It's good to see you, Tom. First, how do you feel about the way the market interpreted Nvidia's financial results? The stock first dropped before the market opened, then remained steady before closing more significantly lower. Nvidia is one of those stocks that, in my opinion, is practically legendary in the market. Everyone has their opinions, and the profits didn't alter anyone's belief in artificial intelligence or Nvidia's pivotal role in increasing global productivity. However, the sell-off indicates that a lot of positive news was already factored in. One advantage is that the larger market did not collapse along with it. With small caps being one of the beneficiaries, it demonstrates that there is space for rotation. Let's discuss that rotation. If we examine the valuations of industries that haven't performed well lately, how far do we still have to go? Should we be worried about market-wide valuations rather than simply Nvidia's? Our clients are undoubtedly inquiring about valuations. Although the rotation is based on a few factors, the equities market has been rising for a number of years. One is that small caps and cyclical stocks benefit from the Fed's lower rate path. Due to concerns like the yen crisis, investors are de-risking, which has resulted in a large amount of money sitting on the sidelines. Investors will likely follow through on this rotation as a result of Nvidia's performance and the Fed's September actions, in my opinion. Even while established firms like AMD and Intel and startups like Grok are becoming more competitive, Nvidia has a distinct advantage thanks to their early investments in AI-specific architectures like their HBM-based designs. Nvidia is in a strong position going forward because of its capacity to scale its operations and sustain leadership in important AI technologies, despite some detractors' claims that these supply chain requirements may provide difficulties in the future. In the future, Nvidia's reaction to the intensifying rivalry in the markets for specialist AI chips, such as inference, will be crucial. Nvidia keeps pushing the envelope with innovations that strike a mix between performance, scalability, and market supremacy, while Grok and others concentrate on optimizing for speed and power efficiency. The next stage of the AI hardware battle will probably be defined by this relationship between learning and inference, as well as Nvidia's capacity to keep a firm handle on both. Given the present market conditions and regulatory scrutiny, investors will be keenly monitoring Jensen Huang's speech at the Goldman Sachs Communacopia conference for any updates on the company's roadmap. For the time being, Nvidia is still one of the most significant and carefully followed businesses in the IT industry, but it is unclear if it will be able to maintain its amazing growth trajectory or face more formidable obstacles. In conclusion, Nvidia's leadership in AI hardware, its strong ecosystem, and its history of innovation indicate that the firm is well positioned to benefit from the AI revolution over the coming years, despite the volatility and worries about regulatory inquiries. Although investors are keeping a careful eye on the company, Nvidia continues to be a major force in the market for those who think AI has a bright future.